The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 12th day of May, and what a fascinating market. If you're short, you say to yourself, as the market, what is about 6 times in the last 2 weeks, the Dow and the S&P futures have been down huge in the morning, and if you're short, you say, yes! And as you say yes, you say no! As it comes back again, there it is. Dow's only down 13 after being down more than 130. S&P's down 3 after being down 16 or 17. Actually, no, the Dow is way more than that, 180 or something. The buying pressure is really interesting, and what we're looking at here is the way that it's fascinating. The way that let me just move this chart. This is what I show my subscribers every day. And look, the way that this rectangle formation has contained the price, went down under the 9-period moving average, bounces back above it. That is really quite admirable action. You just have to look at that and say, hey, the buyers just keep coming in, and you have about 2 or 3 trading sessions every day because of what happens intraday. So we'll just keep it cool here and say, let's just follow the market and see what happens, because there are a number of things that are going on, a number of negative things, and a few positive things. But the few positive things seem to have on their side the backwind of or tailwind, and that essentially is maintaining the support level. So let's just run the numbers. And QQQ and the Den asks, can we look at TLT? Absolutely. We're going to look at everything. In fact, this is a great day to do it. Why? Because thus far, we've given back even more than the huge gains on Friday. I had someone email me. Actually, it's rare that I get a grumbling email. But this one was a grumbling email saying, essentially, how could you have missed? Well, what's with technical analysis? How could you have missed such a sharp move to the upside on Friday, and berating technical analysis? And I didn't respond because there's really nothing to respond to. You can't anticipate what's going to happen from an extraneous source. The way that was interpreted on Friday, that was an aberration. That was absolutely an aberration. And you can see that it was an aberration. Why? Look at that huge candle on Friday. The low was, in fact, on the Dow, 17,933, and the high was 18,205. You could not take it out on the upside yesterday, Monday, the first session after that. And today, we went to 17,924. We took out the low of Friday by 9 points. So we were just back where we started from. So that's talking about the trading range, saying that rectangle formations can last a lot longer than your patience. And as you're getting nearer to the top side, you've got to be looking towards the short positions. Why? Because that's been the history of this particular pattern. And when you get to the bottom, you've got to be thinking of the top side. And what happens is at some point you're going to break out to the upside, and that'll be the first real change of scenario, or you're going to break to the downside, and that'll be the first change of scenario. On the downside, there are a lot more positions of support, and you can go right to this trend line, this dashed red trend line that I'm showing in the Tiger TV at 17,750. Then you can go to 17,733. Then you can go down to 17,560s or 17,579. Those are the levels. And at some point in May, if we break the bottom one, then the sideways consolidation has begun to show a weakness is excellent in the market because it's showing lower highs and lower lows. Okay, yeah, I mean, this is just the way you got to do it. And so let's go on. Let's look at the individual areas. So the E-minis are now down 250, having been down at 280. What was the low? I think 279. Yeah, 2079.25 was the low. It's trading 20 points higher, 2095 and 25 cents. The technicals are very poor still in the daily chart. The 120-minute chart has improved, but it's stuck at the 200-period exponential moving average. So the day is young. Anything can still happen. My bias is still towards the downside. We'll just deal with that. And in certain sectors particularly, that's really the issue. And they seem to be working okay right now. Let's go to the next story. The next story is, we'll run them down. INDU, the Dow. The Dow is trading at 18,073, down 31, having spiraled to the downside. Look how many long-legged dojis there have been. But the weekly chart is suggesting that if there was a deflection lower, and by the end of the day, if we close like minus 70 on the Dow or more, minus 8 to minus 9 on the S&P or more, then it's going to weaken the weekly technicals. But it is still only Tuesday. The week has barely begun. No, it's just barely begun. But look at the power of this 200-period exponential moving average in the 120-minute chart of the Dow. It held beautifully and it sprung back. But look at the power of the 9-period moving average, the black line. So the black is the 9-period, and the coral color at 17,950 is in fact the support area, trapped at this particular point. All right, S&P, SPX.X is down 7. It's at 2,098, and it's under the 9-period exponential moving average with very weak technicals. Look at that. Well, let me use a different mouse. Look at this. Very weak technicals. Look at that MACD deflecting lower. It hasn't even actually turned down. It's just turning lower. It hasn't even touched the red line, the slow moving average. And look, the MACD still at 57%. However, the weekly chart has held fairly well up until now. And we're going to be watching this closely. Why? Because the 9-period exponential moving average is a tad lower than where we are right now. And if on Friday we close anywhere around the 2093 area or lower, that's going to be a heads up to say, be careful. We're making a deflection low in the MACD weekly chart, and the stochastic is going from the 90s down to the 80-something area. It's at 88 right now. Still very good technically, but chart-wise, it's not that good. All right. Monthly chart, I don't want to get into the monthly charts right now because there's nothing wrong with any of the monthly charts other than to say I'm starting to see a divergence between the technicals, but the month isn't even finished, isn't even halfway through. We've got the IWM. One of the weaker chart patterns came off the bottom very nicely. And right now, what we're looking at is, and sorry for my arrow, my pointer moving around so much. I'm just trying to get it stabilized here. The IWM weekly chart, this is the third week that it's been under the 9-period exponential moving average. It is a hindrance to the leadership roles that have been played before. So I'm looking at it and saying, okay, it's just one indicator, but it's an indicator that's telling me that weakness in a former leader and in some of the former leading sectors is something to watch really closely. The reason being, the generals cannot lead by themselves. And in fact, I don't have many generals leading. And if the weak links, the soldiers, are starting to get tired, it's just a heads up to say, hey, be careful. Can't do it alone. All right. So the monthly chart is in leg D, could make a peak D this month. It's made a peak F in the weekly already. So signs are that the IWM Russell 2000 is beginning to weaken. The QQQ series trading at 107.83, down 44 cents. Also got that H pattern, second H pattern, not a good sign. Mostly I'm looking at the weekly at 107.83, down 44 cents. If there's a close under 106.20 to 105.80 support this week on Friday, I would say that's a very negative stand. So our bias for my subscribers to my opening call, we've been biased towards the short side. And at this particular point, I'm not going to say I feel comfortable about it because I need certain levels to be pierced. I need to know that we're going to close weak today and that this is bear market activity. Yesterday was very much the kind of intraday bear market activity that I love to see. Instead of the other way around, where rallies are bought. In this particular instance, rallies were sold, and there was weakness. Even when there was a strong move to the upside, the closing price was a weak price. That's bear market material. But you've got to have the VIX rallying sharply, and the VIX right now is at 1422. I want to see it in the 15s by the end of the day to get a little bit of comfort to say, you know what, I think we've timed the trend okay. I think that the bias is that the key indices are weakening and that the leadership role is just getting fewer and fewer. The disparity between leaders and weakers. Excuse me. Not sure just why I got that frog in the throat. But there it is. The leaders and the weakers. Is the disparity is quite great as far as I see it. So the QQQ looks to me like it very well could turn into a peak F top if that continue. The weakness in the stochastic and the MACD continue to show themselves, and but it's still at 81%. So we'll see where the stochastic closes on the week. Let's go to the New York Stock Exchange, NYA.X. There we are. And that demonstrates very nicely the steady move to the upside, but it's getting harder and harder and harder to break out. And that's saying that although the weekly chart is still very strong in the New York Stock Exchange, trading down 31 and 11,109 under the 9-period exponential moving average, we'll see if there's a close today somewhere around the 11,090 or lower area. I suspect that the H pattern is going to repeat itself, and we will be testing the low of 11,961. Okay, 10,961. No. 10,000. Yep, 961. All right, TLT. TLT, that trend line support, I think I showed my subscribers this yesterday. I showed trend line support is suggesting that there could be a little bit of a bounce from the low today of 118. That's why I moved this over. 118.82. And what we're looking at here is 122.30 is a long way away, even though it's just 3 days ago, 3 sessions. But that could be a bounce area. And if it is a bounce area, it's just saying, hey, at this point, you've got to think that you've got almost an A to B equals C to D. This is the lightning rod. The lightning rod pattern that you hear about all the time at TFNN. Many people use it, and that's a one-to-one expansion to the downside. If it's going to happen, we take the TLT to the 200-period exponential moving average at 114. I'll just type this in as we're going to go to a break from there to there. That's the first place. Second place would be from the 9-period moving average, take it to 114. I'll be back and we'll look at some of the other indices. Dow's down 53, S&P's down 8. Basil Chapman, Tiger Conditions Hour. Love to hear from you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, we're looking at the TLT. The TLT is trading at 119.89, up 36. So, excuse me. This is what we're looking at. From the last retracement, it did a Fibonacci expansion to about a 261. And it held very nicely at that line. The technicals suggest from the MACD that there could be a little bit more of a bounce. Then there should be more of a bounce as an M-shaped pattern forms, but that's only if the stochastic at 6.92% is able to get above 10% into the 12, 13% area. Then 120.70s is the first real resistance. And then, as I say, you got that gap that can be filled, and you've got the 122.30 level, which is really quite a way up when you consider what's been going on for a bounce. Okay, so now let's continue. We've got so that's the TLT. I'll just do bonds for a moment. The bonds have come down very sharply. Made an A, B, C, D peak D in the 120-minute chart. Made the H pattern, broke below. Now it's bouncing back. And that says the rally that's going on right now in the 30-year Treasury bond continuous contract has, in fact, done more than a one-to-one to the downside. And one of the reasons is that this trades overnight as well. So we've got much bigger moves. It says that a chunk of it might be complete just for now. And at 153.5, you could go to the 155 if there's a 9-period moving average target on the upside. But if it breaks above that, you could retest the 157s to the 158 area in bonds, make the H pattern. That's going to be, I would suggest to you that the next What is today? Tuesday. The next 3 to 5 sessions going into exactly a week from today. It'll be good to go through the Sunday night, Monday period into Tuesday of next week to tell whether or not bonds are making the kind of top that suggests the Japanization of our bond yields could be over. And in fact, we are going into an increased rate situation. My thinking here is it's enough. If I'm correct, and it seems as if there's a lot of evidence building that we've been in at least a slight mini recession, if there's such a thing as a mini recession, slight slowdown, economic slowdown for the past couple of months, maybe a few months even, but I would say at least 7 to 8 weeks. We got to watch this real closely. There's this inside track in the continuous contract. This month's support is at 150.5. Goes underneath it. You're looking at something here that says that inside track up channel, long-term up channel support hasn't broken. If it does break, it'll be the first time it suggests, oh, okay, finally we're going to see an acceleration in bond yields. My feeling is if you look at the HGX, look at this. The HGX is not looking too good. Oh, that was a monthly chart. The HGX, which is the Philadelphia Housing Sector Index, holding well, but actually on a shorter term to intermediate term basis, that's the monthly chart, especially the 218 level support is at 225, down at $1.82. This daily is suggesting that it's done the arch formation, done a perfect left side, right side price tie match to the Chapman wave inside wedge down channel support target line. It's suggesting that 216s are likely in the next 2 weeks, which is the 200 period exponential moving average. Stochastic and MACD are not acting all that well, and the monthly chart is actually looking very poor technically. So we'll see what happens here with the Philadelphia Housing Sector Index. Now let me just make this a little bit, let me just pull it down here. Do I need it right now? Okay, so here we go on. We're going to go to gold, GC. You would anticipate in this particular period that gold, with the dollar pulling back so sharply, would take the opportunity and say, yoo-hoo, this is the moment that I've been waiting for. I want to break out. I want to get out of this 1190s, going to the 1210s. I want to get to the 1220, 1225 level. I want to retest that arch high. So far, it hasn't been able to do that. So far, it's really quite pathetic. It's at every opportunity. Look, the dollar DXY continue. This is the DXY is the dollar index itself. And look, the dollar's pulling back in the in the H pattern. Same. It looks like T-bonds. You remember we spoke about that time that Yellen came out, and the dollar got smacked and the bonds held okay, but the dollar really got smacked. And my contention was that the Fed would love to see the dollar pull back to allow the international companies to show some better profits. We'll see about that. Okay, so we've got a break coming up. Now the Dow's down back to 50 and S&P's down 8. I'll be back. Basil Chapman, Target Conditions Hour. This is a perfect day for looking at your stocks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman, and we're going to, what happened there? See, I hit the wrong button. I hit a caps. I'm in caps right now. So the Dow trying to come back. It's at minus 37. S&P's down 6 points. It's interesting that the 500 stocks are a lot weaker than the Dow itself. And that might curtail the upside. We'll see what happens. Day's young. And I'm busy doing a couple of charts here. One chart in particular, this is Zoe. Is that an E? Is that an F? Oh, boy. Let me just do this 1 second here. 3350. Yeah, okay. So that could be an instant restart. This is an unconventional instant restart. So this is G/C. So this is going to be E/A, F/B, and looks like a G/C. It's running into some trouble here. So let me just do this real quickly. The Zoe, ZOES, is symbol 3341, down 6 cents. And it's called Zoe's Kitchen Inc. I don't know much about it, other than I've seen the name every once in a while. Kind of cute name, Zoe. And as far as I'm concerned, it's acting better than the market. It's not a great-looking chart, but it's kind of a defensive chart in some ways because it has to do with maybe restaurants. I guess that's what it is. Now what we're looking at is that it's in a trading band, and the 3281 is going to be key support. If it takes that out, that'll be a sign of weak. If it closes under it, it'll be a sign of weakness because the MACD and stochastic didn't help it to break higher, and break higher means that it should go to about the 30. It's at 33.46. Should be at 33.80 to 34.10 within 3 days if this is going to continue. So here's my recommendation. I don't know if you're long, if you're short, if you're looking at it, why you're looking at it, but I am going to say that it is holding better than the general market right now. It's down just a penny. At the same time, there's a triangle formation forming. And if you're long, I'm going to say I would not worry at all about it right now. If you are long, you're probably long from a little bit lower down, and I'd give it some room. And the reason why I said I'd be a little cautious if it took out yesterday's low, anywhere around the 32.50 support, you've got to anticipate that it could test the 31.70 to 31.60s, the moving average support levels there. As it stands right now, it actually looks as if it is in a holding formation with a slight up bias for the last 2 weeks from that bad candle that it had. The fact that it's recovering so quickly with an inside bar says to me that the 120-minute chart, which at this particular point is looking, let me just move that to the right. Yeah, it's looking, there's exactly the same thing. The 200-period moving average at 32.90 is a magnet. It's broken above it. It's probably going to have to test it. It could pull back to the 32.60s maybe just briefly, but then it's got to get right back again and prove that it's trying to turn the 32.60 to 32.90. Actually, it's really 32.75 to 32.90 area into very strong support. That's very important. So I wouldn't do anything right now. It's holding very well, and just stay long. And what I would say to you is, if this starts, because it's an IPO, it's been out not for that long, if it starts to break down as a core position, I probably would say, you know what? You've got to do your own fundamental analysis. I don't think that I would hold it if it broke that whole 32 area support, 31.60 support area, because that would suggest to me that the weekly chart wants to make an arch formation now rather than to test the top of the arch formation. And that would be important. Why? Because it could go down to the 29s or even the 28s. You'll have another opportunity, I think, to get into it. Not only that, the way it moves, in the range that it moves, the 10% up and down range, over a period of quite some time, I think you will have another chance to get it if you are stopped out. So that's my thinking along those lines. So now let me do this. I want you to do a follow-up. You remember we spoke about the dollar just a moment ago, and the dollar was trying to rally, made the little H pattern. Well, the euro has a chance, and I do say a chance. If I had to put the probability right now of what it can do, I'm going to say the probability is probably over 65% right now, as the dollar is taking its hiatus, its restive period after a spectacular, really spectacular, many months long rallying, and now quite a few months of consolidating. My sense is that the euro could make leg D in the daily chart above 1.13910. The weekly chart is showing something so familiar. Look at this. We've seen it in the gold. We've seen it in the USO, in the crude oil. The commodity area, and I have to put this into the commodity area, of course, is suggesting that there is a counter-trend rally going on. And I call it a counter-trend rally because of the damage that was done on the weekly basis, the fact that we haven't made a V-shaped pattern that went straight in this particular period. If this was a new buy signal in the weekly chart that was going to go to a buy mode suggesting leg D as well, then we should have been at this particular point right up against that candle of the 9th of January in the weekly chart. In 1.19 to 1.2 is really where we should be, making a nice V-shaped recovery. Could still happen. We'll see, but that's what I'm suggesting. So meantime, I think the euro has tremendous support at the 9-period moving average of 1.1175, and that there's a good chance that if it takes that 1.129, it's going to quickly go to test the previous high and make leg D. Okay, that's the way I see it there. Now we had another question. I had a question about the VIX index. So let's go to the VIX index. The VIX index. The VIX index has rallied quite nicely. It hit again that 200-period exponential moving average. Who would have thunk on a Friday sharp move to the downside into the 13s and then the 12s that within 2 days we'd be back testing the 200-period exponential moving average at 1492. I'm raising my hand. Why? Because of what I spoke about, and I said that from the look of the chart, the fact that we did break out that dashed line, from the look of the chart, it suggested that if we close under the 12s, the 11s would be here for a while, and we would definitely be breaking out in the market. But if there was a chance that we could bounce and kind of hold that bounce, then all of a sudden you're getting this cup formation, even though there was a lower low at a leg E, possibly a trough E by the end of this week. There is so much going on in the sine wave, S-I-N-E-W-A-V-E, pattern of the volatility index that is beginning to look very much like the VIX wants to test the whole candle that was made last week to go to 16.36 and wants to test it over the next 2 weeks or so. If it does get anywhere, I suggest to you, if the VIX gets to 1570, it's $1.50 from here, then there's a really good chance it's going to retest the 1649 area of the 200-period exponential moving average in the weekly chart. We won't even talk about the monthly because that is still under the 9-period moving average of 15.17. We'll do one step at a time. Well, in this case, 2 steps, daily and weekly. All right. Now, here's let me just show you the 120-minute chart. Look, the 120-minute chart did almost what we wanted. We wanted a left side, right side price time move that would take, well, the first one was to this level here of 16.66, and the next, let me put that in, 1666 and 1719. So this one is 1719, and this one's 1666, 1666. When was Bach born? 1656. Anyway, so this is 1666. Let's see, and Bach and Vivaldi were born in the same year, right? So what we've got is a bowl formation with the potential of a handle or another smaller cup formation. So that's all we can say in the 120-minute chart. The day is young. You're in leg B, almost certainly to be a peak B when this bar concludes. I'm not sure just yet if we're going to get some kind of a market slide to take us to the top where we were. But in the meantime, what we're looking at is that 200-period moving average of 14.37 in the 120-minute chart. It is really critical. And my buying will keep coming in because that's the nature of this market. There aren't too many choices. Where would people go? Very important. So the USO, crude oil, let's go to crude oil. Crude oil made a peak F top in the 120-minute chart, the Chapman wave. It made a peak E top that coincided with the peak E in the daily. And a leg A is forming the second leg A. And this one, you remember, I don't have it. In my CD introducing the Chapman wave methodology, I've got the pattern of the fading H's, lowercase h's, and eventually it makes a large H arch formation, and then an even larger one as it takes time, which eventually does come back, almost always, and retest the low, in this case the low of 1561 in the USO, which is the United States Oil Fund. So far, crude is at 20.84. It's up nicely, holding the 9-period exponential moving average. The MACD flattened out, a little bit negative or flattened out. Stochastic was very negative, but the price is holding well. So we're watching this one very closely as well. So now I'm going to go to Brent in Martinez, California. Brent, how are you?
Doing wonderful, Basil. It's always a pleasure talking with you.
Good. Nice to talk with you as well. So you're looking at?
I went ahead and I actually need to thank Steve Rhodes and then John from Philly. Kind of gave me the idea, and I went and looked at it myself. But the TLT this morning, I went long with some calls on that and doing very well so far. But we're hoping you could take a look at it, please.
So the TLT, which is the iShares 20-year Treasury Bond ETF, is trading at 120.37. So this is the long side of bonds. It's 20-year. The bonds themselves we look at are usually the 30 years. What we're looking at here is that it's up 84 cents, 0.70, and it's made a little V-shaped turnaround in the slow stochastic. And the MACD, a little earlier I'd mentioned that the MACD had flattened out. It was a little bit negative, had flattened out. Now, the way I use volume, if there was a climactic volume spike to the downside this morning, with the highest volume that we've seen in this case, 120-minute chart, it would be weeks, and in the daily, it would be months, then I would have suggested that the TLT can now have a bounce of about 3 weeks. That's in time, 28 days or more, 4 weeks. But I haven't got that. So what I'm going to suggest is there's a lot of resistance at 122.40. If that resistance is pierced, 123.96 is the 200-period moving average, the daily moving average, next resistance. And then 124.90 is the smooth moving average, 200-period moving average resistance. At this particular point, I would prefer to suggest that you've got a really great entry, but you're talking about something that is very much influenced by many events, whether it's overseas events, whether it is local, it doesn't matter. But you are definitely looking at some kind of inflection point here where this down channel, well, I should usually make it pink, this pink down trend line was hit exactly, and you've bounced off it as the histogram is improving in the daily chart. The MACD has not turned around yet, so it's still very early, and the stochastic is actually just flattening out. So on a purely visual basis, the chart itself, not the technicals, but the chart itself is saying, hey, nice move up from a lousy gap down and lousy close yesterday, but the day is yeah. The weekly chart says whatever you're bouncing to, there's a chance that if you break today's low of 118.82, anywhere around 118.82 to 118.40, and then close below it on a weekly basis, the longer term, that's in short to intermediate term, meaning we're now going into weeks and maybe a month and a half or so, suggests that you could go down to 114.52. So I'm going to also say to you, if you've got an entry point and you're in the options market, you probably want to hold, and I would have a mental stop based on the TLT, and I'll explain why. The TBT, which is the exact opposite, had a spike up, and I don't know yet, 49.19, so I don't know if this is an isolated single leg A up that's going to fail, or a leg G, or a brand new A. Why? Because the stochastic actually went all the way to 86%. The MACD is not great, but it is positive, and it's suggesting, based on the 200-period moving average, which is at 49 on the TBT, which is the ultra-short Lehman 20-year Treasury ETF, it's saying to me that it broke out in leg E in the daily, and that it should be coming back, but 47.11, which is not too far away, will be really important. So I wanted to put those two things together. If you don't mind, I'm going to also try to put I'm going to try to put oil. See if I can get a relationship there. Can you hold on?
Absolutely, Basil.
Okay, great. We've got Brent in Martinez, California. We're looking at the bonds. We're looking at...
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Rick here, hosting today's Options Hour. Think or Swim. It should be a great show as always. Let me show you something here. We've got Brent on the line from California looking at the TLT. I've got the TBT, which is the mirror image. So this is what I'd drawn, and this is what I looked at. There was an island reversal at 47.54 peak D in the TBT back on the 6th of March. It pulls back and it makes a low at 40.57 on the 1st of April. It couldn't give a Chapman wave left side, right side price time match because it was flattening out and had to make the U-turn over there from the low and the retest, which was successful. But then it gave a beautiful left side to the right side price time match, which took it to the 8th of May. Well, it turns out that on the 6th of May, it broke out beautifully 2 days before, pulls back and then breaks out again. It's like a Chapman wave cup and ladle breakout, which can go to a D, but then has to retest the lip. Now it's showing some strength and it's gone to an E. The MACD is still good. The stochastic is holding at 85%. So what I'm looking at here And the reason why I said if you're in the short, if you're basing it on calls, I'm going to recommend that you look at it real closely. There could be one more day of a pullback in the TBT, but if it actually spikes, if it turns this 200 period into a kind of a magnet, it's going to be a magnet from pulling back to the 47s, then retouching 48, 49, and then going to 51, and then retouching 49. It'll be back and forth, making a kind of a sine wave right here, up and down, up and down. A U and a cup and a U and a cup. Sounds like a good song. So shave and a haircut. So this is the same thing in the weekly chart, which has gone to leg C. So I'm going to suggest that you'll stay with the shorting the TL or buying the TLT is contingent upon having fairly tight stops, and I would even recommend taking a little bit off to make sure you got a profit, because overnight it could suddenly turn down and retest. So I am expecting a bounce, but I'm also saying it might be just a short-term trade. Hope that helps you.
Oh, I agree completely, Basil. I've been trying to stay much more nimble in this market, and I want to thank you for your help on Yelp yesterday. I already sold that, and I just don't see a need to hang around and stuff too long. If you make a nice profit, take it, be happy, move on.
You know, that's exactly right, and that's exactly what's been happening. Where we're talking just a moment ago about one of the volatility index ETNs. Same thing. You take your profits, and you should be taking them and get out, and you can make fabulous profits. If you hold it, you're kind of subject to wanting this market to really turn down in a big way, and that VIX will move higher. So I agree with you, and at some point that will change. But yes, take profits. You can always get back in. Thanks so much for calling, Brent. I appreciate it as always.
Thank you, Basil. You're always a fantastic help. I appreciate it. I love talking with you, and have a great day, okay?
Same here. Thank you very much. So let's do this, folks. As we're about to go out, now the Dow's coming back again. It's down 22. There is determined buying. I mean, it's as if the fund managers are saying, hey, I don't know what to do. All I know is that if every time I've bought, I've been successful, it's rewarded me, I think I have to do that now. But I'm suggesting to you that things are changing a little bit, that we've got to be real careful, that a trading range is in place, and until we decisively break into the 18,300s on a close in the Dow, we've got to be nimble. You've got to think that this is just a choppy sideways market right now. We're not staying at the bottom, but we also don't stay at the top for very long. So let's see what happens. But I'm going to make the VIX once again. I'll just do it again. The volatility index trading right now at 1410. If it closes more towards the 1385 or lower today, that's going to say, no, you're stuck in this range with a slight bias now, maybe to the upside, but still in a range with the S&P. Watching it closely. If the S&P closes down, it's at 2099, closes below 2093 today, with the Dow down more than 65 or 60, 70 points. That's a negative. Watch it closely. I'll be back later today. Thanks for being here. Speak to you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.